Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Alex here from the financial planning team at Fenton Financial, and also part of the 6-star team at Positive Collective. I hope everyone is well. Another episode of Wealth Coffee Chats, everything around finance, financial planning, strategies. So I hope you guys are enjoying it, and thank you for being so involved in the chat last week and the weeks prior. So, and also after the episodes as well. So I'm getting a few messages asking me questions and giving me ideas as to what we're going to cover in the next financial year. So with that said, we are in the last couple of days of this financial year. So last week we've covered off on some of the last minute items that you could do, and safe to say that there were a few of my own clients as well as external people reached out and asked a little bit more about the questions and what they need to do. So hopefully you're all ready and set to go. Again, the financial year for this 25 financial year ends on Monday. So perhaps there's some last minute actions that you could do, but ultimately I think we are done for this year. So I thought, given that it's the last sort of episode for this financial year, I've already got a few cool episodes to come to you in 2026. But let's just finish on a couple of fun things in this episode. So let me just go through a couple of things. So we'll go over some interesting news that I came across over the last week, and there were a few. And just, I guess, what are we expecting from July onwards in terms of a couple of changes that are coming your way? And then if we've got time, I'll cover off on something that came across my desk during the property summit. Met a couple of cool people there, and they asked me to cover off on a few things. So I haven't forgotten about you guys, so I will cover that off maybe today, maybe in the next couple of episodes. But let's dive into it. Hey, Kevin, thank you for jumping on all the way from the US. Awesome. Good evening. Yeah, it's evening for you guys and morning for us here in Australia. So let's have a look. Actually, Kevin, this might be more relatable to you because one of the fun things that I sort of come across it, and perhaps a lot of people seen it and maybe not, but the LA Lakers, the NBA basketball team, was sold during the week. So for $10 billion. Sounds like a lot of money, right? And it is. But I guess the story around it is even more interesting. So looking back at it, it was bought in 1979, I believe, or 1980s for about $67.5 million, right? So that journey, right, of over close to 40 years, right, has yielded a significant sum in the end. So this is something that we chat about, or I've been speaking about over the last several episodes about timing within your investment. So for the Bus family, that was their investment, and clearly 40 years. Obviously, a lot has changed during that time, but still, quite a cool story, right? So 67 mil turned into 10 billion from 67 million. Crazy amount of money that was sort of created through that strategy. So this would form part of something like we spoke about the asset allocation in the last few episodes. It would form part of the alternative assets, right? So it wouldn't typically fall under anything else. But interestingly, I did see something else in relation to this, and that was another outlet sort of mentioned that if you were to have invested that money into the share market, so the US S&P 500, which is the top 500 companies on the US stock exchange, then you would have yielded over the same time about $12 billion, right? So $2 billion more. So interesting how different assets over a similar time frame will give you different results. So I guess the question for you would be, what would you rather have to run LA Lakers, the NBA team, or sit in the equities for that period of time? So the other interesting fact, again, I just realized they're both in the US. So apparently they are finishing or they ceasing production of pennies. So Kevin, you might know this, given that you've from that part of the world. So they're no longer going to be creating or manufacturing any more pennies. So based on what I saw, it's about it costs about 4 pennies to create one. So if we think about digital currency and cashless society, is this a sign? I don't know. Don't want to speculate, but it's something interesting that has come out from that side of the world. So for us, I guess one point that has come out, and perhaps it was covered during the week, but the Farmland has done quite well over the last 20 years. So that has done about 250% over that 20-year period. So according to the reports, the best yielding sort of real estate across different categories of real estate, so commercial, resi, etc. So quite cool. So don't know whether that's a fact or not, but I wouldn't be surprised. The Farmland has been performing quite well. So that's about it for the fun facts for this week. But let's just look forward into next week. So July, 1st of July, what are some main changes that are coming through? So the first one would be around the super guarantee. So I mentioned that previously, and I think a couple of guys mentioned that in the past as well. But that's going up from 11.5% to 12%. So what is super guarantee? If you're an employee, you are also getting a super as part of your package, whether that's part of it or whether that's on top. Excuse me. Got to have your coffee. So, which means that for you guys, if you are implementing some of the strategies that we spoke in the past, like super contributions or anything like that, then you definitely need to put that into your to-do list to review from July onwards, right? Because all of a sudden, that $30,000 cap that you will have in July 2026 financial year, the amount that you can add extra from your personal contributions will actually reduce. So speak to your advisor, speak to your accountant, and work out what those numbers look like. The other one that is kind of still in the limbo, but is looking like it's likely to come on, then not, is Division 296 tax, right? So that's the tax that applies to super balances above 3 million, whereby you are paying an additional 15% tax on earnings and unrealized capital gain. So just be mindful of that. So if you are sort of getting closer to that level, then definitely seek advice around what that looks like for you and what strategies you might have to address that if that's an issue for you at all. Looks like we've got Chris jumping on. Thanks, Chris. Morning, mate. Thanks for jumping on. Again, guys, if you have any questions or if something that is been brewing in the back of your mind about, I would like to find out a little bit more about this or that, then put it in the chat or send me or send our team a text and let us know what it is that you want me to cover off on. And hopefully I can give you that info through, general information. Obviously, as the disclosure at the start, seek financial advice or speak to a professional. So yeah, July. So again, super guarantee is going up by 0.5% to 12%, and Division 296 tax that is likely to come into effect at some point in the early stages. So we'll keep you updated on that. Nothing else really. There's other things in other areas that will change, of course. But from the strategic perspective, we're probably looking at those couple of things. So how are we going for time? I think I've got a couple of more minutes. So one of the things that I want to chat to you about, guys, and I'm getting this question more and more, not just from external conversations, but also internal. And that question is, how can we retire? And I'll come back to retire in a second. Early, right? And when I say early, sort of that the age range that I'm getting is around sort of early 50s, right? So about 10 years out from the magical age 60. So sometimes magical, sometimes not, just depending how you view it. But that's the sort of range where I'm getting that question. And when I say retire, right, I always want to go back to the person or the group that I'm speaking to just clarify, what does retire mean to them? And in many cases, it doesn't mean that they want to completely leave their job or, sell up and do whatever. It just means giving flexibility to choose how much they work, right? How much they work versus how much they spend with their family versus how much they travel versus they do something that actually interests them. So, and again, this question popped up during the property summit a few weeks ago. And I said to this couple that, yes, I get this question quite often. And in fact, we're working with a number of clients at the moment on this particular strategy and how to sort of get there. The main sort of message here is it's really about when you start planning for this, right? So for example, you came to me at 47 and you said, hey, want to retire by 50, 3 years, right? So realistically, it is possible during the times when things are quite positive, which is probably never. If you look at the markets, even the first 6 months of this year, we've had the tariff sort of blip. We've got the Middle East escalations. There's all these little spot fires everywhere that create a lot of volatility, which in effect impact where your investments are and what they are doing over that period. So I guess the message that I always say to the people that I speak to or to these groups, I always say, look, get it, let's work towards it. But realistically, the further out you can be from that end date or that date that you're looking to kind of get that flexibility, the better it will be. So, if you say in the early 40s and you're looking, say early, let's say 40, 41, and you want to retire at, when I say retire, get flexibility to reduce work, then, you've got a 10-year run up to get there, which means that 10 years is quite an interesting time frame because it's typically looks like a cycle around a lot of investment asset classes. So you look at equities, right? Typically a 10-year investment in equities, irrespective of what happens during that period, you typically do come out in a stronger position, which means the investments have appreciated. Property, the same thing, 10 years, right? So typically in the 10-year time frame, the property does tend to go up in value. Obviously, there's exceptions, right? For everything that I'm saying, that there's going to be exceptions, and I've got perfect examples for you. Equities, you got GFC, took about 8 years for that to recover to where it was pre-GFC. Property, you look at WA, the last 10 years, if you look at what they've done in the last 10 years, minus the last sort of 18 months, there was no movement. Gold, you look at gold before the last couple of years, it did nothing for 10 years, right? Alternatives. Similar with other alternatives, there could be a period of time where your investment potentially doesn't do anything and just goes sideways. So going back to the, how do we sort of plan around this? It's really step number one is time, right? You got to be realistic with your time frames, and you want to start planning for it well in advance. Starting something a couple of years out and thinking that, hey, look, I will get there is highly unlikely unless, you've got something like a Bitcoin, for example, that has skyrocketed in the last, say, 3 years, right? So again, super aggressive. Those are the type of strategies that you might have to be exposed to in order to get you to the position in a shorter period of time. But if you've got time and you plan for it in advance, then by setting up investments that are likely to help you get there, that will most likely yield the results that you're looking for. The other thing is also not only the assets, you got to think about, all right, let's just say fast forward 10 years. What am I doing at that point in time? I've got all these assets. What do I do with it? You got to be thinking about the capital gain consequences. So, which means that at that point, you already know that there's a capital gain. You can't do anything about it from a structural perspective. So again, you got to go back to the start and think about, well, how do I structure this now for that point in time? Income. How do I get income from my asset pool, right? So, there might be some debt involved. What happens to the debt? Am I paying that debt off, or is that still leveraged to a certain degree? How am I going to convert my assets into cash? Right? Do I need to do that? What's my end income goal to cover my sort of flexibility, for example, right? Because realistically, you probably will still work in some capacity, but the flexibility piece, you want to make sure that you've got something covered there. So this is like a very surface level sort of intro to what we probably will cover over the next couple of months. So I do want to come back to this topic because it is becoming a very, very common question. How do we do something like this? And, you know, again, coming back to the point that time is number one, and you know we'll look at other considerations there as well. Oh, good morning, Sonia. Nice to see you. Thank you for jumping on. So look, guys, again, last couple of days of the 25 financial year. So hopefully you've done all the right things. You've had your tax planning meetings with your professionals. You've done all the maneuvers that you needed to do before the end of the year. And look, from my end, looking forward to 2026, see what we can sort of help you with in terms of information, guidance, etc. So if you do have any questions, please reach out either to myself or to the team and put in your questions or topics that you want me to cover, or maybe it's to somebody else in the team, and we'll put that into our schedule of topics to cover off on. So for now, thank you everyone for jumping on, and we'll see you guys in the next financial year. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.